Good morning, everyone. Good morning, Geet, Ayush, Yogesh. Welcome back, everyone. Yes, very good morning, all. Now, we are in the customs territory, right? If the last lecture you all recall, I had explained you the history and the development of the Customs Act over the years till the present state. Also, I had mentioned one very important aspect of the customs law, that customs law also acts as a single window system for the government of India. What is this single window system? Through customs, not only the customs duty, but also some other duties are levied and recovered. Also, if you remember, I had mentioned that customs being at the borders of India, besides the role of being a taxation law, a law for collecting revenue for the government, taxation being, you can say, 50% only aspect or purpose of the customs. The remaining 50% is the role of monitoring, the role of keeping a watch, the role of, most importantly, even acting as a protector for our domestic industries. Now, somebody will say, sir, how one act can do so many things? I'll tell you how. So, firstly, it is a taxation law. The purpose is to impose and collect tax on a particular transaction, which over here is import export. But at the same time, it also act as a deterrent, act as a, you can say, a tool to control import or export of certain things. How? See, we cannot always prohibit anything coming into or going out of India because of our WTO and GAAT GATT agreements. So today, since we are operating in open economy, since we are part of the global economy structure, we are not allowed to outrightly prohibit or restrict certain things, import or export. But at the same time, if I want to moderate, I want to regulate the import or export of certain thing, the way or the approach is to impose some heavy taxes and duties. So customs does that. Besides levying the custom duty, it also imposes levies safeguard duties. The purpose of these safeguard duties or protective duties is to control and regulate the excessive import and in some cases export of certain commodities. This is done to ensure that if it is import, the huge quantity of import of any particular item does not adversely impact our domestic industries and domestic market. Because if something is being imported which is very cheap in huge quantities, definitely our Indian markets will be flooded with those items. Those items would get sold. So it will adversely affect our domestic industries. They may, at a point of time, even shut down. This has happened in the past. That is where we are more concerned when it comes to Chinese goods. Similarly, at the same time, it is also important for government to ensure that we are being competitive, or our products, our local products, our domestic products are being competitive foreign products. So that is also done by imposing some extra taxes, duties, though this also has a challenge in long term because of the same WTO and GAAT principles. However, subject to certain conditions, restrictions, we can impose certain duties so that we can provide a protection, a shield for our domestic industries, domestic markets, and make our domestic products competitive by imposing some amount of duties on the imported goods so that the prices of those goods come at par with our domestic goods prices and our domestic goods become competitive. This is how customs is used as a tool to regulate, control the Indian markets and the domestic industries. Similarly, customs act as a window, a single window system, because there are multiple domestic levies or duties which are also collected at this single point, that is the customs. For example, earlier we had excise, we had VAT. Today we have GST. We have GST's compensation cess. All these are collected at the time of import itself by the customs. So the customs helps in acting as a tool to protect domestic industries, plus to serve as a single window system for the government to collect all local taxes at the point of import itself. Plus, the customs duty that we are going to study in this chapter is broadly of two categories. One is revenue duties, which are imposed to collect revenue, which is the main purpose of taxation law. But second purpose is revenue and protective, where the purpose is providing a shield, providing a protection to our domestic industries, to our domestic goods, and to our domestic market. Also, if you see the present Trump government's ideology, you'll understand the relevance of this customs duty even more. What we are discussing, talking, hearing about tariffs being imposed by the Trump government, that is nothing but something part of the customs of America in this case, whereby it is being used as a tool by the Trump administration to impose heavy tariffs, heavy duties on goods coming from particular countries so that in their case they can arm twist, they can bring to terms certain countries, which eventually is indirectly for the internal development and growth of American industries, and also for providing more employable opportunities to the Americans. So Trump has also resorted to this type of measure, which is today called as Trump tariff, whereby it is using their country's customs duty to bring to terms different countries, bring to term different government, so that either they make investment in US against lowering the tariff, or like what they are expecting from India, they allow certain US goods to be sold in India, which presently is barred, which presently is restricted. So Trump is using their customs duty as a tool for ensuring the policies and promises of Trump being materialized. So this is just an idea which I'm trying to give to you, ki how duties of customs can be used. Now we explore this chapter with simple pointers in mind that Customs Act is no act only for the purpose of revenue collection. The purpose of customs is much wider as what we discussed. Now, as I said, there are broadly two types of duties, revenue duties and protective duties. So revenue duties are the basic custom duty, the IGST, that is a GST component on import, compensation cess of GST wherever applicable, social welfare surcharge, and agriculture infrastructure development cess. These five are revenue duties. And then you have the protective duties, which includes safeguard duties, which includes countervailing duty, which includes anti-dumping duty. And then this chapter will deal with how to compute the value for calculating the duty. We are not going to study valuation. Valuation is altogether a different chapter, but how the value will be determined, what would be the inclusions in the value whenever you have to compute all of these duties, and the emergency power given to the government to impose or enhance any of these duties. Now, except this chapter, in all other chapters of customs, we will be studying and referring to the main parent act, which is the Customs Act. However, this chapter is going to refer to a separate act, which is the Customs Tariff Act. Going back to our previous lecture, if you recall, I had explained this, that in case of customs and the earlier excise, the act was split into two parts. One, the parent act, which provided for all the provisions relating to levy, exemption, compliance, and assessment, etc. And one separate law, which was exclusively designed to provide only for the rate of duty, rate of tax. The same format is available in case of excise. The same format is followed in case of customs. So in the earlier excise, we had two acts, the Central Excise Act and the Central Excise Tariff Act. In customs also, we have two acts. The parent act is the Customs Act, and the other act which we are going to discuss today is the Customs Tariff Act. Tariff Act is the act which is only dealing with the rates of duties. This act provides exclusively the types of duties and the rates of the respective duties, nothing else. Now, how these acts are connected or how these acts get triggered. So, the parent act, which is the Customs Act, if you recall, we studied the charging section, section 12. What did section 12 of the parent act, that is Customs Act, say? It said that duties of customs shall be levied on import export at the rates which are specified in the Customs Tariff Act. So section 12 of the parent act has asked you to come to the Customs Tariff Act for the purpose of checking the rates. That is how Customs Act bring you to the Customs Tariff Act. Similarly, section 2 of the Customs Tariff Act, Now I'm talking about this present act, which is the Customs Tariff Act. Section 2 of the Tariff Act again says what? It give reference to the Customs Act. So as you can see, Customs Act said that duties of customs shall be levied at what rate? At the rates which are specified in the Tariff Act. It is also saying or any other law for the timing in force. Why? Because as we saw, customs is a single window system. Using customs, you are levying other taxes also like GST, compensation cess, earlier excise VAT. So for respective rates, you have to go to respective acts. That is why it is saying or any other law for the timing in force. So Customs Tariff Act also or any other law where the respective rates are given. And now the section 2 of the Customs Tariff Act says the rate at which duties of customs are to be levied as per the parent act shall be the rates which are specified in first and second schedule of this Customs Tariff Act. So section 2 of the Customs Tariff Act also gives a linkage with the parent act, that is the Customs Act. Now, having said this, the next important point, students, that you need to keep in mind and remember is we saw a list of different duties in which the main duty of customs is the basic customs duty. In short, we will call it as the BCD, basic custom duty. Now, when you read section 2 and when it says that the duties which the Customs Act has provided are specified in Schedule 1, Schedule 2. Schedule 1, Schedule 2 is basically providing for the customs duty, which is the basic customs duty. So when we are talking about the customs duty, Schedule 1 and 2 is dealing with the basic customs duty. And in Schedule 1, you have the duty rates provided for the import. In Schedule 2, you have the duty rates which is provided for the export. On export, we have very limited items on which duty is levied. Import, we have virtually everything covered because every country wants to promote its export. So whenever a country wants to promote export, definitely duties will be levied on export selectively. Only where some restriction has to be brought in, there is duty of export. So in export schedule, you find very limited number of goods. But import schedule covers everything. Now here, I would like to talk about something which is part of our second chapter today, which is classification. Now I just mentioned that import schedule is very vast. Everything, all goods are covered in the import schedule. In this relation, we have to understand that. And now here I will also bring a linkage with the GST law. Please pay attention. Why we decided to make this customs tariff act separate? Reason being that when international trade started growing, a practical difficulty, a practical challenge was envisaged. What is that practical challenge? The practical challenge is, I'll give you an example. India exported slippers to Japan. Now, importantly, we are not talking about a language problem that we are using English, they are using Japanese. No, the invoice is made in English. In Japan also they know it is English. But when our consignment reached the customs of Japan, when it was supposed to be cleared from there, their country blocked the consignment from clearance. Country means their custom authorities. Why so? Reason is our exporter, which was, I'll name the company Bata, and I'm sure you all know what are slippers. Slippers are those chappals that we wear for our in-house use. Now, when Bata exported slippers, they wrote slippers because this is the word which we use in India to represent that inner house footwear. In Japan, in English, when they use the word slippers, it means some other product which was at that point of time restricted, prohibited in Japan. So what I'm trying to give you an idea is that international trade always had the challenge, not of language. Language, let us say English is being used across, but you all will understand and appreciate that every country, or forget about country, even within our country, India, same word will have different meanings in different regions. Same word in the same language. In fact, English language or even Sanskrit language, multiple languages are such where a word used in different context will give a different meaning. Similarly, the names of goods, how they are understood in India, may not be understood elsewhere. Like simple example, when you say bread, again an English word, in India, if you say bread, we will mean bread. In US, if you go and say bread, it will even mean chapati because in their language or in their country, they do not use the word chapati for chapati. So we will call chapati. They will call chapati also as bread. So this is what is the difference in usage of certain words. Another example, when we say bills, we mean invoices. In US, bills means currency. Their currency notes are called as bills. So again, understand this. What I'm trying to give you and a picture is that a particular word may mean different things in different countries because that is how a particular word has come to be used in a particular country. Now, in this particular case, the problem is that it brought a lot of hurdles in international trade. So at that time, WCO, not WTO, WCO, World Customs Organization, which is obviously part of WTO, World Trade Organization, it decided to bring a standardized names list of all the goods and also give those names a standardized identification code so that henceforth internationally, if everybody is using the same word to represent a particular goods, there will be no challenge what I just discussed. And then further, since over a period, machines are being used, computers are being used, which are more comfortable with using numbers instead of using names. So they are given codes, which we today call as HSN. What is HSN? HSN is basically the list developed by the WCO under the WTO so that a standardized name will be used across the globe for international trade. That is why it is called as harmonized system of name. Nomenclature means naming. So HSN is nothing but a list where all the goods which are being traded internationally are listed, are given some names, how they will be known, how they will be referred internationally. And then against these names, they are given the code numbers, which today we call as HSN code. Internationally, this HSN code is a 6-digit code. However, in India, we have added two more digits. That is why when you study GST, you know over there that there are 8 digits. Why? Last 2 digits we have added because we wanted to make further detailings because in India, even achar, that is pickle, has different varieties. So internationally, a pickle is a pickle, that's it. But within India, you will have variation in pickles. Forget about only variation in pickles. Even in one type of pickle, like let us say amka achar, yeah, even nimbu ka achar, we have variations. So in order that we provide such detailed classification or such detailed list, we have added two more digits so that we can further subclassify a particular category of goods. So I'll talk more about HSN when we go to the second chapter in the later part of today's session. But just to give you an idea, this HSN was then given to all the countries who are engaged in international trade and asked them to compulsorily follow this HSN so that when they are trading internationally, there should not be a problem. This is where we delinked the tariff act. So earlier, every act, customs, excise, tariff was part of the main act. But then, since this list was given and we had to follow this list, we decided to bring this list as a separate act. That is why now we have Customs Tariff Act, we had the Central Excise Tariff Act. Both these tariff acts had the same list given by WCO. And now when GST was brought in, the same list is adopted in GST's rate schedule with adding two more digits. So in GST, our goods notification, rate notification, which we call as notification, here we do not have a separate tariff act. Instead, we have gone for a notification where the rates are given. We are giving 8 digits so that we can further subclassify the goods for our domestic business. Just a minute. Now, keep this backdrop in mind so that when you study GST classification also you'll understand. And even today when we study the classification in customs, which is the second part, this will be helpful. So this is how classification concept has come. This is how HSN has come. Now, when you go to this Schedule 1, first schedule of Customs Tariff Act, it has 5 columns. So every page will have 5 columns. Firstly, for your important information, this Schedule 1, which is the classification list given by the WCO, where names of lakhs of goods are given. How these names are given? Are the goods arranged alphabetically? No. How are the goods arranged in this classification schedule? They are arranged into chapters. They are divided into chapters. So presently, anybody knows how many chapters are there in this classification schedule? How many chapters are there? Anybody knows? Okay, good. Keith. Okay, Ayush. So, Geet, you are right. So, Geet has said 99. Now, this is interesting. If you go to this Customs Schedule 1, in fact, this is the list which has come from the WCO. It has 98 chapters. But when you go to the GST rate notification, where rates are given, we have 99 chapters. Now, why there is one extra chapter? Because we have copied, yes, very good, Geet. So we have copied the 98 chapters in GST from the customs only, and customs has taken it from the WCO. So the same 98 chapters were there even in excise because customs and excise both dealt with goods. Same are there in GST. But since GST also covers tax on services, so we decided to add one more chapter, 99th, exclusively covering the services. That is why GST has 99 chapters when it comes to the GST tariff. Now, interestingly, these 98, now I'm talking only about customs, that is for goods. These 98 chapters are arranged or categorized into sections. So like how your books have chapters, but chapters have section. So let us say section 1 covers first 6 chapters. Section 2 covers next 4 chapters. Section 3 covers next 5 chapters. Similarly, here also we have sections. Now the detailings of that we will study when we go to the next chapter, that is classification. Presently, what you need to know is that every page where these rates are to be given, that is in every chapter, you have 5 columns. Now, what are these 5 columns for? First column is the HSN. So the first column that you will find is the HSN. Second is where the name or the description of the goods is given. Third column is for the unit. Now, unit means what? The rate of customs duty, which is given in the fourth and the fifth column, is per what? Is it per piece? Is it per kg? Or is it a percentage of value? So that unit is given in the third column, so that you come to know that when you are referring to the rate in the next two column, the rate is per watt. So it is per kg. So kg will be written in this third column. If it is percentage of value, so percentage will be written. So that you'll understand ki it has to be multiplied by watt. And then fourth and fifth column both deals with the basic custom duty rate. Now the question will come, why do we have two columns? The answer is fourth column covers the standard rate, which is applicable to all, and fifth column covers the preferential rate. So both are the rates of basic custom duty, but standard rate is the rate is applicable, that is the rate which is fixed by government for all goods. However, where the government has signed or entered into a special agreement with certain countries whereby those countries are considered as preferential countries or preferred countries. So those countries are given this status called as the preferential nation status. So these countries, when goods are exported by those countries to India, so for them, since we have given them this status of preferential area or preferential country, for them lower rates will apply. And this last fifth column covers those lower rates called as the preferential rates of duty. Now, when a particular import will fall in the preferential rate. So in order to get the benefit of preferential rate, which is a lower rate, the importer has to fulfill the following conditions. What are they? At the time of importation, he should make a claim. So it means in his bill of entry, the importer has to specify that, boss, these goods apply the preferential rate. So you have to make a claim. The custom authority themselves will not apply the preferential rate. Second, he should claim that the goods are manufactured, produced in that particular country, that is in the preferential area. Further, the area should be notified under Section 4.3 of Customs Tariff Act to be a preferential area. So Section 4.3 of the Customs Tariff Act has given a list. So your area, your country's name from where you are importing goods should be covered in that. And last, you should be able to prove that the origin of your goods is from that particular area. For this, you have to follow the procedure given in the rules as made under Section 4.2 of the Custom Tariff Act. So you have to prove that yes, see, these goods are originating from that country only, so that your goods become eligible for the lower rate. Then second is the next schedule, as we discussed, is for export duty. Majority exports are exempt. However, for very few goods, that is a very small list of goods, the government has levied export duty for the purpose of control and regulating those goods. Now comes IGST. So as we discussed, customs is also collecting some other local taxes. So on import of duty, we have studied in section 5 of the IGST Act that IGST will only be levied because imports will always be considered as interstate supplies, and the IGST gets levied as per section 7 of the Customs Tariff Act, which we are going to study now in detail. Next, taxability of goods imported by SEZ. This is important. Goods which are imported by a unit of SEZ or a SEZ developer for their authorized operations are exempted from the whole of IGST applicable under 3.7 of the Customs Tariff Act. Next, if goods are imported by 100% EOU, it attracts customs duty. Import of goods by 100% EOU is governed by Notification 52. EOUs are allowed to import goods duty free, that is exemption from customs, IGST and cess under the said notification. However, exemption from exemption from IGST will be subject to fulfillment of some specified condition. Then again, how compensation cess is applicable when you are selling some specified goods in India. If those specified goods are imported, even compensation cess, the GST compensation cess will be applicable, for which provisions are under 9, that is 3 bracket 9. And then 3 bracket 8 explains you the manner of computing the value for calculating the IGST. Now, what does 3 bracket 8 says? 3 bracket 8 says that you have to make a total of few amounts. On this total, you will calculate the IGST and also the GST compensation cess. What are these amounts? First, you have to take the value of the imported goods as per the customs valuation provisions. In GST, if you remember, our valuation provisions are in section 15. Customs valuation provisions are in section 14 of the Customs Act. So, as per the valuation provisions, you have to determine what would be the value of goods imported into India, and that value is called as the customs assessable value, or in our words, taxable value. First amount. Second amount is you have to compute the customs duty which is applicable, which we studied or saw above, which is the basic custom duty. So the basic customs duty has to be computed and this amount will be added. Further, you have the customs surcharge, which is the customs social welfare surcharge, that also has to be added. So the basic custom duty, the custom surcharge, both these amounts, when added to the customs assessable value, this amount, this total is the amount which becomes the value to calculate the IGST and also to calculate the compensation cess. So basically, the IGST and compensation cess, that is the GST related taxes, will be computed on this total value. And this total value is total of 3 items: the customs value plus the basic custom duty plus the customs surcharge. Then comes the next question: how to compute value in case of warehouse goods? Again, try to remember something which we studied in the GST law. What is that? I have imported the goods. I have kept the goods in the custom bonded warehouse. Now, until the time my goods are kept in custom bonded warehouse, we studied in the previous chapter of customs also, no customs duty will be demanded, because the import is said to be completed not when the goods actually come into India or physically come into India. Import is said to be triggered, or the liability is said to be triggered when the importer files bill of entry. Now, if when my goods are imported, I have requested the customs to keep the goods in the custom bonded warehouse. So they will remove the goods from the port and shift it to the custom bonded warehouse. When these goods are kept in the warehouse, custom bonded warehouse, I need not pay the customs duty. These goods will become liable for customs duty and parallel IGST or compensations, as whatever is applicable, only when I apply for clearance of these goods by filing the second bill of entry. Now, in this case, the question is, what will happen if before clearing these goods are sold by me? So we studied this in Schedule 3 of the GST law, where we discussed that until the goods are in the custom warehouse, if some customer approaches me, I can sell the goods to that customer, and customer will now go and clear the goods in future whenever the customer wants the goods. Now, in such cases, let us say I have sold these goods to Ayush. Goods are still in the warehouse. Then in such cases, tomorrow when Ayush will go for clearing these goods, then how will the customs duty and again the IGST will be computed? The answer is given in section 3 bracket 8a. So what does 3 bracket 8a says? That if the goods which were lying in the warehouse before their clearance are sold by the original importer to the other person. So in my example, I am the original importer. I have sold this to Ayush. The goods are still lying in the warehouse. Till now, there is no duty attracted, neither of customs nor of IGST because of Schedule 3 of the GST law. But when these goods will be now cleared by Ayush and Ayush has now to pay the duty, how will the value be computed? So for this 3 bracket 8a says that the value would be higher of. So it is whichever is higher. Higher of what? Where the whole of the goods are sold, the value determined under subsection 8 or the transaction value of such goods, whichever is higher, and where any part of the goods is sold, the proportionate value of such goods as determined in subsection 8 or the transaction value, whichever is higher. Now, what is this? What is the value determined in subsection 8? We saw above. It is the total of three: assessable value, import duty, social welfare surcharge. The total of this will be compared with the sale value. So when I have sold these goods to Ayush, I would have charged some price to Ayush. You have to compare that value, which is my sale price, which is over here referred to as transaction value, with the above value, which is total of these three amounts. Out of both, whichever is higher, that will be considered as the value when Ayush is clearing the goods for the purpose of computing IGST. Interestingly, what is further given? What if Ayush has, after purchasing the goods from me, not got the goods cleared? Ayush has further sold the goods to Yogesh, and let us say Yogesh also has further sold the goods to Geet, and now finally Geet is going and clearing these goods. Now, when Geet is clearing these goods, it means before clearance, these warehouse goods have been sold by three persons: by me to Ayush first, Ayush to Yogesh second, and Yogesh to me, Geet third. So, three sales have happened. In this case, how the value would be determined? So they are saying we'll take the last sale price, that is the price at which Yogesh has sold to Geet. That sale price compared with the value. Which value? Assessable value plus basic custom duty plus social welfare surcharge. Whichever is higher, on that value, we will apply the IGST. Now here also in customs, you have two types of values. One is the transaction value, that is your actual sale value, and one is the value which is fixed by the government, which is tariff value. Geet is asking a question. Geet says, sir, the transaction value charge while invoicing for warehouse goods, is GST also to be charged? No, beta. This is where I gave you reference of Schedule 3. We studied in Schedule 3 that until the goods are cleared, before that, whoever sells the goods while they are still in the custom bonded warehouse, there is no GST applicable because goods lying in warehouse of customs, if sold, is not treated as a supply as per Schedule 3. And since it is not treated as a supply, there is no GST liability. If no GST liability, it cannot be charged. Now, so we saw section 2, which is basic custom duty, which has two schedules: schedule 1, schedule 2, schedule 1 for import, schedule 2 for export. And then we also discuss about other duties. Now we discuss it in detail because all these other duties, GST, compensation cess, everything is given in section 3 of customs tariff act. Now what does section 3 talks about? Section 3 talks about additional duty of customs. Now what is this additional duty? As I said, it is nothing but collecting all the local taxes. So section 3.1 is the additional duty which is equal to the excise duty applicable in India. Now today we know, after introduction of GST, only few products are left for the excise because others are merged into GST. What is not merged is still covered under the old taxes. So what is not merged? That is the petroleum products. So the five petroleum products and tobacco. Tobacco products is the only product, students, you should remember, which is attracting both duties, the old duty that is excise and the new duty that is GST. So petroleum, five petroleum products, for them, the excise is continuing. Similarly, for liquor also, we do not have GST. So again, liquor is still covered under state excise. So 3.1, section 3.1, which was earlier a major section in customs duty, is now only limited to few goods on which GST is not applicable. So basically what we are understanding is what are the different additional duties charged under customs. So section 3.1 charges additional duty of customs, which is nothing but our Indian excise. Then the second duty is section 3.3, which is also called as countervailing duty. What is 3.3? Special additional duty under subsection 3 is levy, again to counterbalance excise duty leviable on materials, components, ingredients, etc. Again, this is levied to include or charge the duties of excise. However, since again majority goods are now under GST, practically this duty is not having much relevance today. Then we had 3.5. 3.5 was dealing with what? 3.5 was dealing with VAT. So this duty was charged to counterbalance the local taxes of sales tax, VAT, then other local taxes like octroi. So all these local taxes which are leviable in India, they were recovered by the customs authority as a special additional duty under section 3.5 of Customs Tariff Act. Again, post introduction of GST, as we all know, now these duties are limited only again to what? Liquor for human consumption and the petroleum products. Hence, at the time of import, if these goods are imported, then only you have the special additional customs duty. Fine. So today, mainly the duty under section 3, which is being imposed, is our IGST and the GST's compensation cess. So on all imported goods, along with the basic custom duty, you will also be paying the IGST, which is levied under section 3 bracket 7 of this Customs Tariff Act, and the GST compensation cess. Now, section 8 gives powers to the government to impose or enhance export duties. And similarly, we'll study section 8A, which gives power to impose or enhance import duties. Now, what does this section deals with? Let us understand the relevance. Under GST, our duty rates are given by way of notification. Hence, we call it as the rate notification. Whereas under customs and the earlier excise, the duty rates are given in the act, this which is the tariff act, which we are presently studying for customs. Now, what is the difference? See, we all know that acts are to be passed by the parliament. So parliament, not government, the entire parliament is given powers by the constitution to pass acts. Whereas notifications can be issued by the government without asking the parliament. The difference is, in case of GST law, we have delegated the power to levy, increase, decrease the rates to the government, because now in GST the rates are in the notification. Whereas under the earlier excise and the present customs, the rates are under a special act called as the Tariff Act. Now here this point says that even though the rates is in the Customs Tariff Act and the act can be amended, modified only by the parliament, but since customs, as we are discussing, is levied for one of the major purposes, that is controlling, monitoring what is coming into or going out of India. Hence, there is a need that some emergency actions are taken. So it may happen that the government may have to take some action immediately if the government gets some information or intelligence that certain goods are being imported, they are coming to India in large quantity, which may affect our Indian industries, our Indian businesses. Now, at that point of time, like right now, the parliament is not in function. But if some information, some reports suggest that there is huge quantity of import from China, or let us say nowadays China is not doing that directly, it is using some smaller countries like Cambodia or Vietnam. Now, if goods are being exported by these countries and they are coming to India in huge quantities, an immediate action has to be taken. How? By imposing some extra duties. How that will be done? Because the power is with the parliament, because you have to amend the act. So, to provide an emergency power to the government, that until the parliament comes into operation, the government should have the power to do this. Section 8 gives the power to the government to impose or enhance export duty, and Section 8A gives the power to impose or enhance the import duty. So, what it says, the conditions, the goods may or may not be specified in the second schedule. The government is satisfied that circumstances exist which render it necessary for either imposition or enhancement of the duty. So, where the government wishes and it has information that is necessary to impose or enhance, the government can impose or enhance export duties. So, Section 8A. Section 8A deals with similar power. The only difference between 8 and 8A is the first point. In case of 8A, the goods should be already specified in the first schedule. It means the government can impose or enhance import duty, but for that, the name of the goods should be present in the list. Whereas in case of export duty, even if the name of the goods is not present in the list, the government can still impose. It means in this case, the government can add the names of the goods in the list. In case of export duty, in case of import duty, the government cannot add the names of goods in the list, but it can only increase or decrease the rates. So this is what is the difference between both these powers, and that is why both the powers are given under separate sections. Had everything been the same, they would have kept only one section, but they needed to make this distinction. So they have carved out a different section for import powers and different section for export powers. Now we come to the second category of duties which are levied, that is the safeguard or the protective duties. Now, as I mentioned at the start, customs is also used as a tool to safeguard your domestic industries, domestic market. How? By imposing for a temporary period some extra or additional duties besides the above revenue duties. So above revenue duties were basic custom duty, IGST compensation cess, and we will further study the agriculture cess of customs or the social welfare surcharge of customs. These are revenue duties, but besides these, wherever the government feels that we need to provide protection to our domestic markets or to our domestic industries, the government can resort to protective duties. The power to impose these duties are covered here. Now, what does Section 8B says? Wherever the government has conducted inquiry, and through this inquiry, the government gets the report which says that some goods are being imported into India in huge quantities. And second, the report says such increased quantity of importation has caused or is threatening to cause serious injury to our domestic market, domestic industry, then the government can impose this safeguard duty. What is domestic industry? Obviously, the industry which is in India and whose goods become part of our India's total production, that is our GDP. What is serious injury? Serious injury means injury causing significant overall impairment of the industry. Threat to serious injury means clear and imminent danger. Developing country means country which is notified by the central government in the official gazette. Objective of this is the safeguard measures are imposed for the purpose of protecting the interests of our domestic industries. Now, what are the modes of the safeguard? The modes of safeguard is first, imposing the safeguard duty or application of tariff rate quota, what we are seeing in case of Trump. So what is tariff rate quota is one, rate can be enhanced, two, some limit can be fixed, which is what is called as the quota, that beyond this we will not allow the imports. Other measures the government may deem fit. Now, what are the points that you should consider? The central government may allocate tariff rate quota to supplying countries having a substantial interest in supplying the article in prescribed manner. So in this, a particular rate will be given up to a particular quantity. So this is for regulating that we are allowing the goods also, but not in increased quantity. That is what is quota. Second, a safeguard duty is in addition to any other duty. So whatever this extra duty the government will be levied over and above all the above duties. So it is not replacement, it is addition to above duties. The government may by notification in the gazette exempt some quantity of the articles as it may specify. So maybe few goods may be exempted from the above safeguard duty that anyways the government has to do. Now, minimum level of tariff rate quota, the average level of import in the last 3 representative years. So how government will fix the quota to allow up to this quantity we will levy no safeguard duty or lower safeguard duty. So they will see last 3 years imports. Then for what period the safeguard duty may be levied? Initially, when the government is levying it for the first time, it will be levied for 4 years. And then after conducting further inquiries, if the government feel that we need to still extend this so that our industries get protection, it can be further extended, but subject to maximum 10 years. So initial 4 years plus extension can be further 6 years. So maximum 10 years, the duty can be imposed. Now, who are given exemption from the safeguard duty? So if the goods are coming into India from developing countries, so up to 3% of total imports can be allowed without levy of safeguard duties from one developing country. So where the goods are being imported from a developing country, then up to 3% of total imports is allowed from one developing country without levying safeguard duty. And if more than one developing country is providing the same goods, then maximum 9% of total imports is allowed from all the developing countries combined. So one country, so let us say we are buying goods from Cambodia, which is obviously a developing country. We are buying goods, same goods from Bangladesh, Sri Lanka, Vietnam, all are developing countries. So from one country, up to 3% of our total imports is allowed to be without safeguard duty. And if multiple countries, multiple developing countries are supplying the same goods, up to 9%, all countries combined, we will allow import without levying the safeguard duty. Next, where goods are imported by 100% EOU or SEZ, the safeguard duty will not be levied. So safeguard duty is exempted where goods are imported by 100% SEZ, 100% EOU or the SEZ, unless it is specifically made applicable by the government. Then comes provisional assessment. What is provisional? Provisional means temporary. Now we saw above that where the government has conducted inquiry and inquiry suggests that there is injury which is caused or threatening to cause. But let us say the inquiry is still going on. So inquiry is not yet concluded, but industry report says that huge quantity of import is happening and the government needs to take some immediate action. So this provision empowers the government to impose this safeguard duty on a temporary basis, which is called as provisional safeguard duty. This temporary is 200 days from the date of its imposition, means government may temporarily impose this safeguard duty and let the inquiry conclude, but then it should be concluded within maximum 200 days. That is, government should conclude within next 200 days whether or not it wishes to levy and impose this safeguard duty. If upon final determination the government is of the opinion that the increased imports has caused or threatened to cause injury, the safeguard duty will continue. But if it is proven that it has not caused, then the safeguard duty, whatever you collected, since it was provisional, you will return it back. Now, since these are emergency powers, and as we discuss, the power to uh, bring changes in the customs tariff act is only by the parliament, but these are emergency powers. So government has imposed this. After imposition, whenever the parliament is in session, the government will have to place these notifications in the parliament, so that finally the parliament should decide what to do of these protective duties. So government may have imposed these duties, but it would be finally accepted, rejected by the parliament. So for a total period of 30 days, which comprises in one session or in two or more successive session, this particular notification will be placed before the parliament, and the parliament has to decide whether it should continue or whether there is any modification required or whether it should be completely annulled, that the parliament will decide. Now, the second type of protective duty after the safeguard duty is the countervailing duty. Now, what is countervailing? So, countervailing name means countering. What is this countering? Here, when you are importing goods from a country, many times the government of that country is trying to promote their exports by giving their manufacturers some specific subsidies, so that when those manufacturers are exporting their goods, the prices of their goods will get reduced. This is what our government also does. To promote our exports, we may give our domestic manufacturers some subsidy. Now, when our government is giving a subsidy, it reduces the cost of our manufacturer, and hence our manufacturer goods become cheaper in the foreign country market. Now, when this type of subsidy is given by a foreign country to their manufacturer and the goods are coming to India at a lower price, it is a challenge for our domestic industry to match those prices. Hence, what our government does, under Section 9 of the Customs Tariff Act, the government has the power to impose this protective duty, which is nothing but countering the subsidy. That is why the name is given as countervailing duty. So what does the government do under this section? So whatever subsidy the foreign country government has given, we impose this duty exactly equal to that subsidy, so that it gets countered. So if that country has reduced $50 by giving subsidy of $50, we will impose exactly $50 as the countervailing duty. So it is not that we are going to impose any extra amount. We are simply going to nullify the effect of subsidy by imposing exactly the same amount as our countervailing duty. Now, for this, you have to first establish that subsidy was given. How this is established? So, subsidy shall be deemed to exist if there is a financial contribution by that foreign government or by any public body in the exporting or producing country or territory. So if the foreign country's government or any public body has given some financial contribution to that particular exporter, that will be considered as subsidy. There is any form of income or price support granted or maintained by the foreign country, which results in increased export of such articles to India, or the government makes payment to a funding mechanism or interest or directs a private body to carry out one or more of the types of functions specified above. So when any of these things exist, it is the case of subsidy. Now, anti-circumvention measure in respect of countervailing duty on subsidized article, where the government on inquiry is of the opinion that circumvention of countervailing duty has taken place. Now, what is circumvention? Now, see, every businessman is smart. So, if the businessman comes to know that even if their country has given them subsidy because of which his goods are cheaper, and if he's selling those goods to India, our Indian government will impose this countervailing duty. So, it will be of no use because the price of his goods in India will again increase. So, what they do is they try to override this, they try to escape from levy of this countervailing duty. How? By resorting to one of these methods. What is the first method they try to do to circumvent? By altering the description or name or composition of the article. Now see, we are not going to levy this protective duty of countervailing duty on all goods coming from Cambodia, Vietnam. We will do it only on those specified goods where we know that their government is giving a subsidy. So what those exporter will do, they will be selling the goods by changing the name or description, so that automatically the HSN changes, and the moment the HSN changes, we will not levy countervailing duty because for us those goods are not having subsidy. So this is the first mechanism which exporters may resort to. Second is import of such article is in unassembled or disassembled form. What they will do is they will purposefully export their goods not as one complete whole units, but as different subparts or sub components of that unit. And in India, after import, we will reassemble by changing the country of its origin. This is a common practice. So instead of sending the goods directly from Cambodia and Vietnam to India, they'll first send their goods to Sri Lanka, and through Sri Lanka, the goods will come to India, or in any other manner whereby the countervailing duty becomes ineffective. So whenever the government, the exporter is resorting to any of these means, the government in India can take measures to ensure that proper duty is levied so that the purpose of this countervailing duty is taken care of. Next, absorption of countervailing duty. So absorption of countervailing duty is said to have taken if there is decrease in the export price of an article without any commensurate change in the retail price in India, or under such other circumstances as the government may provide by rules. So what is absorption? Absorption means where the countervailing duty gets adjusted or added in the price. So that is what is absorption. Non-applicability of countervailing duty, when this duty will not be imposed, same where the articles are imported by 100% EOU or SEZ. Now, what is the amount of this countervailing duty? It is equal to the amount of subsidy given by the foreign government. So we do not want to impose any irrational duty. We will impose it exactly of the amount of subsidy. Some important points. This duty is in addition to all other duties. This duty shall not be levied unless it is determined that the subsidy relates to export, subsidy relates to use of domestic goods over import goods, or the subsidy has been conferred on a limited number of persons. Next, what is the time period? This duty will be imposed for 5 years first, and if required, further extended by 5 years, so total 10 years period. Again, until the government gets the final report that yes, there is a subsidy, the subsidy is impacting our Indian markets. Until the report is received, government may temporarily impose this duty so that immediate action can be taken. If after inquiry and reports, it gets to know that no, there was no such problem, the duty will be refunded. Interestingly, this duty can also be imposed retrospectively. Now, what is this? Government gets the information late. By that time, already import has happened. But still, the government has the power to impose the duty retrospectively. How much they can go back? They can go back 90 days. So roughly 3 months. So government can impose this duty today, saying that this will apply for last 3 months imports also, that is retrospectively. Rules will be framed by the government for implementing this particular duty. Applicability of machinery provision. So whatever machinery provisions are given in Customs Act relating to assessment, refund, exemption, they all will apply to this duty also. Next, anti-dumping duty. Now we just saw countervailing duty for subsidized article in which the foreign country government has given some benefit or reduction in the form of subsidy so that the prices of these goods when exported to India will be reduced. Similar to that, many times the foreign exporter himself resorts to a not so good business practice called as dumping. What is dumping? Dumping means when a particular businessman is selling his goods intentionally at a lower price so that his goods get sold in any market in huge quantity, large quantity because of the lower price. And his intention is to disrupt that market to make his place in the market. Such act of the businessman is called as dumping. I'll give you a simple example. Geo came into business with this model only, though Geo is Indian company only. So it is not that dumping is done only by foreign companies. Anybody can do, any businessman can resort to this. So what did Geo do? Initially, when Geo was launched, it provided its subscription at a very low price or even free. What was the purpose? It wanted to disrupt the telecom market, which it did. Even a company like BSNL, which is the government owned company, was out of market because of this, because they were not able to match the price. In fact, before the Jio had come, if you remember, there were minimum 10 mobile service providers. Today, besides Jio, we have only two. One is Airtel and the other is Idea and Vodafone combined. So you can see how disruptive this practice is, whereby when you are launching yourself in the market, you come with a very low price. So the purpose is in the initial years, you may be incurring a loss, but that loss is actually helping you to establish yourself in the market, plus also to close down all your competitors' business, which Geo eventually achieved. And then now Geo is also charging its product at the market price. In fact, today Geo is now the first person to increase the price, and then following Geo, other people do. Now, in this particular case, Ayush is asking a question, sir. In case of retrospective application, okay, the supplier has to bear all the losses as the goods would already be sold. Yes, you're right. See, understand this. Ultimately, when any government imposes any of these duties, it is always their Indian or their domestic people who suffer the losses, either the supplier of the goods or ultimately the buyer of the goods. See, understand this. By imposing this duty, the government is not creating any loss to the foreign exporter. Like today, when Trump has imposed huge tariffs on Indian products, who is bearing the cost? It is being borne by their domestic people only. But then, why countries or governments resort to this practices? See, when tariff is imposed by Trump on Indian goods, what has happened? Indian goods have become costly in the US market. So now their customers who were earlier getting these products at a lower price will have to pay higher price. When they will have to pay higher price, two things will happen. One, either they will stop consuming buying those goods, or they will switch to alternatives, which may be either other country or their domestic country. Same thing happens. So ultimately, the loss is borne by their country people only, because the prices will get embedded in the goods. So in your case, when you are saying okay, where retrospective levy is done, obviously since now the price cannot be increased because the Indian importer had already purchased the goods and sold also at a lower price, and now the government is going back and asking the Indian importer to pay this duty retrospectively. So you are right. the loss will be borne by the Indian importer. But what will happen? This will at least ensure that that Indian importer will not further buy or import these goods, because now that Indian importer knows that if I make any further purchase, it will be costly. So see, understand one thing. Maybe retrospective levy may not stop the goods coming into India because the goods have already come into India. But when an importer knows that the government has such power of retrospective levy, what happens? Understand this. It acts like a preventive measure. So before the Indian importer is buying any goods, and if the goods are cheaper, the Indian importer will be aware or alert. It will first check if there is any type of subsidy given, because it knows that if it is buying these subsidized goods, tomorrow the Indian importer may have to suffer the loss, because if government goes and imposes retrospective duty, the importer has to bear the loss. So you are right. The loss is on the importer only. Now, what is this anti-dumping duty? So similar to subsidized articles, here also the goods are being exported by some foreign country exporter to India at a cheaper price. The only difference is, in case of subsidized articles, the price was reduced by their foreign government by giving subsidy. Here the price is reduced by the foreign exporter himself. So as I gave you example of Geo, the foreign exporter himself gave a reduction in price so that the goods become cheap in India. Now to counter this, the government will impose this duty called as the anti-dumping duty. Now how this anti-dumping duty will be levied? The government will find out the margin of dumping or the injury margin. Now what is margin of dumping and injury margin? It is nothing but the difference between the normal price of these goods and the lower price at which these goods are sold in India. So there is a normal price, but the manufacturer has intentionally lowered the price so that it can dump the goods in India. So the government will find this difference as to what extent the foreign exporter has reduced the price. That is what is margin of dumping. And that amount will be charged as the anti-dumping duty. Similarly, the other word used is injury margin. It is the margin adequate to remove the injury to domestic industry. So either government will find the difference between the normal price of the goods and the reduced price, which is the above point, dumping margin, or government will find the difference between the fair selling price and the landed price. Both more or less the same. Now, again, what the foreign exporters can do, they can circumvent the levy of this duty. So they will try to evade, or they will try to bypass this duty. How? Same, by altering the description of the goods, by sending the goods in India in unassembled form, or changing the country from where the goods are coming, etc. Again, the government takes appropriate measure. Next point, absorption of the anti-dumping duty. Same like absorption of safeguard duty, the duty will get embedded in the cost and price. Again, same, where the government wants, the government can temporarily impose this duty, conduct inquiry, and decide whether to continue with this or not. Again, anti-dumping duty will not be applicable where goods are imported by 100% UU or SEZ. Same point again, here also, if the government wants, the government can retrospectively impose this duty, and this retrospective can go up to 90 days back. What is the time period? Same like safeguard duty, this duty also can be levied for 5 years and then extended by next 5 years. So anti-dumping and the countervailing duty on subsidized article both are on similar lines. Only the purpose or the reason for these two duties is different. That's it, students. So we'll take a break now. It's been around nearly 1 hour, 30 minutes. I've been speaking continuously and you are listening. So let's take a break, 15 minutes break, and we'll reassemble. I'll complete the remaining 2 points in this chapter and we'll go to the next chapter. Fine. The situation or the point is that when goods are exported to India, or from our side when we are importing goods, the prices of the goods are lowered. Reason, either the foreign government has given subsidy or the manufacturer himself is resorting to dumping and has lowered the price. Now, importantly, the outcome is that the prices of these goods is less in India as compared to their domestic prices, that is the normal price. Now, there is a possibility that this price has been lowered by the government by way of subsidy. But since if you see the above point of anti-dumping duty, you compare the price of the goods, the normal price with the export price to India, there is a lowering. So it may happen that for this one reason of subsidy, both the duties get attracted. Subsidized, why? Because subsidy is given. Anti-dumping, why? Because the price of goods exported to India is lower as compared to the normal price. Now, it should not happen that for the single reason, both duties are levied. Hence, 9B has been inserted, which says that no goods will be subjected to both these duties to compensate for the single situation, which may be either dumping or subsidy. So, for one reason, only one duty should be levied, not both. This is what is the point. Further, both duties shall not be levied just because such articles are exempt from duties or taxes borne by similar goods when meant for consumption in country of origin or exportation or by reason of refund of such duties or taxes. So again, the reason is single, that these goods when exported are enjoying some export benefits, which normally happens. This should again not lead to levy of both the duties. Next restriction is these duties shall not be levied where the imports are happening. These duties should not be levied for imports happening from member countries. Which member countries? Who are member of the WTO, or from those countries with whom our government of India has signed the most favored nation agreement. So it should not happen that you are imposing these duties on import from these countries. Further, provisional duties, both countervailing or provisional anti-dumping duties, will not be levied if imports are coming from some specified countries. Who are these specified countries? Again, the above countries only, WTO countries or most favored nation countries, unless the preliminary findings have made the subsidy or the dumping confirm. Because see, we studied that government has power to levy provisional both of these duties, but that will not be levied where goods are coming from WTO countries or most favored nation countries until unless government has the assured confirmed inquiry results. So that is just to provide for avoiding the misuse of the above duties. Now, in case you are not happy with the decision of the government or you want to challenge any of the above, the provisions are in 9C, which provides that against the orders levying any of the above duties, you may go in for appeal to the tribunal, which is the Common Tribunal for Customs, Excise and Service Tax, that is CESTAT. Now, anyway, service tax is not there. Excise has also been reduced to few goods, but the tribunal is still called as the CESTAT. Appeal against the order of determination or review shall lie to the CESTAT, which is constituted under this section in respect of existence, degree and effect of 1. Subsidy or dumping in relation to import. So first you can file appeal to determine whether or not there is existence of subsidy or the quantum of subsidy or the effect, that whether it is leading to injury. Second, to determine what import of any article into India is in increased quantities and under such condition to cause or threaten to cause injury. So again, you have to determine this, because without determination of this, no duty can be levied as above. So fees is 15,000 and for restoring it is 500. So these are provisions for filing appeal. And then the last two duties, social welfare surcharge. This is a compulsory addition to the basic custom duty. So we have the basic custom duty. On that, the rate is fixed, which is 10%. So this is that duty which is not calculated on the value. All the other duties which we have studied above is on the value. This is on the amount of BCD. So whatever is the amount of basic custom duty, on that amount you will add or you will calculate 10%, and this is also to be paid by the importer. Importantly, 10% cess will not be calculated on the other duties, that is a safeguard or the countervailing duty for subsidized article or anti-dumping duty. This surcharge will be calculated only on the BCD portion, not any other duty portion. And the last one is agriculture infrastructure and development cess, which is levied on some specified goods only. What are these goods? The list has been provided. So they are goods like apples, Kabuli chana, various type of coal, urea, silver, etc. So on these goods, there is additional duty called as the agriculture development cess. So these are the various duties which are levied under the customs law. Now, students, we move on to the next chapter, which is very interesting. This chapter is also applicable to GST. How? Now, what is this chapter dealing with? As you can see, the name of the chapter is classification. What is classification? Now, at the start of today's lecture, I had explained you that we are following the list given by the WCO, World Custom Organization, which has prepared a list containing standardized names for various articles, which has to be used by all countries whenever they are dealing with international trade. This is to avoid any type of naming difference, so that there should not be a misunderstanding whenever foreign trade is happening. Plus, having centralized name with centralized code number, that is HSN codes, will help international bodies to collate the data and also to prepare various reports, so that they will come to know which country is exporting which type of data, goods, to whom, in what quantity, at what period, etc. Sorry. All this data, as you know, is very helpful whenever policies have to be drafted, some specific measures or actions has to be decided. So collating data also becomes easy when the goods are having some standardization. Now, this was introduced, as I gave you example, because initially trade was being hampered, or there was a lot of confusion, misinterpretation, because different countries gave different names to the same goods. To avoid that, WCO made a list where it classified all the goods and divided the goods into 98 chapters. Now, these 98 chapters are categorized into 21 sections. So your entire tariff is bifurcated into 21 sections, each sections having some chapters. Now, just understand the structure of this entire 98 chapters. So how is this 98 chapter made? How is the goods categorized or classified under these chapters? So the flow is like this. The very first chapter is for the most raw item, like live animals, or like very raw items of fruits, vegetables, etc. You'll find the reference of them in the initial first 8-9 chapters. Then slide processing is in the next 15 chapters. Then more process items, and then the last chapters from chapter 80 onwards is all high-tech items, machineries, then high-tech gadgets, your helicopters, etc. And then the last few chapters are for some unique items like you have some artistic products, you have some intangible copyrights, etc. So this is how the structure of entire HSN or the tariff schedule given by WCO is. Now, what has happened as the international trade started growing, the number of goods started being added in this tariff, and today we have lakhs of goods. But at the same time, this standardization brought a challenge. What is the challenge? The names which are used in the rate schedule to represent these lakhs of goods may not be the names which we use in our day to day life. Like we say chocolate, you will not find any single product named as chocolate. You will not find any single product named as pastry. You will not even find a product named as pen, not even a product named as mobile. So important is now this standardization has brought a new challenge that if I'm exporting, importing some goods, and I want to find out in which chapter my goods are falling so that I can decide the correct HSN code, which I can use in all my import export documents. And I can decide the correct rate of duty, if there is any preferential rate, if there is any exemption, any other special benefits. All things are now linked with the HSN code. But how do I find out my goods are fitting in which chapter, in which HSN code? This is the challenge created because of using the standardized names, that is the harmonized system of nomenclature. So the purpose of this chapter is to understand how to classify, or I'll replace this word with identify. So how to identify where my goods are falling, in which chapter, in which heading. This process of finding out, identifying where your goods are fitting in those 98 chapter is what is called as classification. Now, what is the use of this chapter in GST? As I mentioned at the start, firstly, this list given by WCO was adapted only for international trade, that is in customs tariff. Later on, it got also implemented in excise by way of making excise tariff, so that at the manufacturing level itself, if you start classifying it using the same name, same HSN code, then at further stage, whenever they are exported, imported, the challenge is not there. And when GST came, it got implemented for all trades because GST covers all trades, even manufacturing, even trading, even service. So for everything, we have adopted the same schedule. Now in GST, this chapter helps because when you are doing domestic trade, where normally we are not comfortable with those international names which are given in the HSN, which is also copied in the GST rate notification. Hence, how to find out where my goods are falling is decided, is guided by this chapter, because this chapter has given you the rules for interpreting the HSN, the rules for classifying your goods under the correct chapter, under the correct heading. So, this chapter has following pointers: customs tariff, which we just studied. Then you have explanatory notes, additional notes. Then this is the main part: rules for interpreting, how to interpret where your goods will fall, and then something about project imports. Now, as we studied in the previous chapter, the customs tariff act is divided into two schedules. Schedule 1, which is giving rates of goods, imported goods, and Schedule 2 giving rates for export goods. Now, in order to determine where your goods are falling, you have to apply the rules of interpretation. What is rules of interpretation? Now, our Indian customs tariff and the excise tariff, and now even the GST rate schedule, all are based on the HSN given by the WCO. So what is HSN? HSN is the internationally standardized systems of names and code numbers given for the products, and this is developed by WCO, World Custom Organization, which was earlier called as Custom Cooperation Council. Now, this list, which is used across the world, is called as HSN, that is Harmonized System of Nomenclature, and the code numbers that are given against each goods is called as the HSN code. These codes at international level are of 6 digits only. How are these 6 digits to be used or referred? So 6 digits, as we can see, first 2 digits are for your chapter number. So the first 2 digits of the code will represent the chapter number in which your goods are falling. Next 2 digits will represent the heading in that chapter. See, every chapter has heading. So it represents the heading number. And the next 2 digits is the subheading number. So this is how 6 digits are used in international trade. We have added more 2 digits because India has more further bifurcation and sub-classification of goods. Now all goods are classified using the 4-digit system. These are called headings. Further 2 digits are added for sub-classification. So 4 digits means 2 first 2 chapter, next 2 is heading, and further 2 is for subheading. Further 2 digits are added for sub-classification, which is termed as tariff item. Rate of custom duty is indicated against each tariff item and not against each heading. So obviously against the name of each goods, the rate of duty is given. Headings, subheadings are only the headers to give you an idea as to what will be covered in this list. But mainly the list which gives the names of the goods, against that you are given the rates. Now how to interpret this whole schedule? So you have 6 interpretation rules and you have 3 general explanatory notes. Using both the things, the interpretation rules and the explanatory notes, you will get an idea, you will get a picture as to how the classification is to be interpreted. Importantly, these 6 rules have to be applied sequentially. So you'll always start with rule 1. If your answer is there in rule 1, fine, or else you proceed to 2. If not, then to 3, and so on. Now, the first schedule of Customs Tariff Act comprises of 98 chapters, which are grouped in 21 sections. So what is a section? Section is a group of few chapters. So as I said, section 1 may be having first 8-9 chapters. Next section 2 may be having next 15 chapters. Now, how they have decided to make these 21 sections? So where similar chapters are there, they are grouped into one heading or one section. So this happens with our notes also. Our notes are bifurcated into 4 parts. So if you go to BOS portal and you go to our notes, you'll find it in 4 parts. So you can say our entire syllabus is divided into 4 sections, correct? And every section has some chapters. Same logic here. HSN, which is having 98 chapters, is divided into 21 parts. Like how our indirect tax module is divided into 4 parts, HSN is divided into 21 parts. And every part has few number of chapters which are similar. So here we have 21 sections. Each section has some number of chapters. So just keep our indirect tax module in front of your eyes. Now, each chapter is further divided. Sorry, each section is divided into chapters and subchapters, and each chapter contains goods of a particular class. So what they have done, every chapter is having goods belonging to a particular category. That is how chapters are made. Like here also in our syllabus, similar concepts are put in one chapter. So we know, okay, this chapter will be dealing with these concepts. So similar concepts, similar provisions are put in one chapter. In the same manner, similar goods are put in one chapter. Now, what is important is the notes given. Now, every section has a note, which is called as section note, and every chapter also has a note, which is called as chapter notes. What are these notes? These notes are the most crucial things for understanding what is covered under which chapter. Just give me a moment. I'll show you something from my database. Yes. I'll give you the real picture of how this, what we are discussing, looks like. See, I've taken two chapters as sample. So WCO chapter 20 and 22. But before that, the whole tariff. Now we are talking about customs tariff. So I'll show you for the whole tariff. Now this is the last updated tariff as on 1st May 23. So see, you have sections. Section 1. We have total 21 sections, right? Now this section has so many chapters. Chapter 1, Chapter 2, Chapter 3, Chapter 4. Now interestingly, firstly, what this section is called? This section is called as live animal products. So whatever chapters you'll find in this first section, like you have 5 chapters, they are all only dealing with live animals, not even vegetables, not even flowers, not even fruits, only live animals. So chapter 1, live animals, 2 is meat, edible meat, 3 is fish, 4 is dairy products, birds, eggs, natural honey. So you see, the animals or their very first product is what is covered in first section. Now section 2 heading is vegetable products. Again, we are, Acha, also remember, I have already given you the broad idea how these 98 chapters are made. So from very raw to very sophisticated. So in the initial, you will have all things which are in the very raw form. So section 2 is vegetable products. Now you'll have live trees. You will have edible vegetables. You have edible fruits. You have coffee tea. Again, coffee tea in the raw form, not the processed coffee tea. That is in later chapters. Then fruits, coffee tea, cereals, etc. Section 3 is what? Animal, vegetable. So already what is covered is repeated, but now with some processing. So, or microbial fats and oils and their cleavage products, pre-prepared edible fats, animals and vegetable waxes. So now it is slightly processed. So first two sections covers the most raw items, both in the category of animal and vegetable. That is, both are food items only, but one is animal, one is vegetable. Now section 3 is having the same things but with some processing. Now this section is covering what? As we saw above. Then you have section 4. Now section 4 is going a step further. What it is covering? Pre-prepared foodstuff, beverages, spirits and vinegars. So maybe extracts from these fruits and animals. So that is another chapter. And as you proceed, so firstly, you can see sections, every section having few chapters. Chapters which are similar are put in one section. Now I'll show you how further chapters are. So see, from chapter 72, you have metals. Now here again, you have base metals. Then from chapter 84 onwards, you have machineries, mechanical appliances. So 84, 85 deals with that. Now, as you proceed, you are getting more sophisticated. Now you have vehicles, aircrafts, vessels, which are related to transport. Then you have optical, photographic, cinematographic, measuring, checking, precision, medical, surgical, instruments, apparatus, watches, musical instruments. Then more sophisticated arms, ammunitions, and parts thereof. Then miscellaneous manufactured items, which covers furniture, bedding, mattresses, etc., toys, games. This is up to 96. And then you have 97, 98. What is 97? Work of art. And 98 is, you can say it is the topic which is kept for the covering whatever special items they want to cover. So like project imports, laboratory, chemical, passengers, etc. Ayush is asking, sir, from where we can download the latest tariff, which I am showing. But this is available. Firstly, you Google it. Google today is the best search engine. You Google it, you write customs tariff. You will get different sites. You can download it from there. It is actually available. I'll show you the name. You can go to that site. Now, interestingly, there is one chapter which is blank. See, chapter 77. So within all chapters, 77 chapter, no name is given. See, against all chapter, you will find some product name. What is given for 77? Reserved for possible future use. So this chapter is not covering anything. They have kept it blank. So if some new item comes, they will fit it here. So even 77 and even 98, the last chapter, because 98 is covering anything what they want, project import, laboratory chemical, passenger baggage. Now these can fit above, but they want to keep it as last item. Now I was talking about notes. Now see, this is the heading of the section. Heading means the name. Remember these terms. Heading means the name or title. So what is the title given to section on live animals, animal products? In that you have some notes. Now these are the most important part. Notes. What are these notes for? These notes tell you what will or what will not be covered in this section. So notes given below the name of the section is called as section notes. Now, when a chapter starts, like in this section, the first chapter, chapter 1 is live animals. Again, in the live animal, when the chapter starts, you have a note. Again, this note is called as the chapter note. So the note given to the section heading is called as section note. Chapter heading is called as chapter notes. Now, when you want to classify, what is classify? I want to know where my products are falling. See, this is how classification appears. You remember we have 5 columns we studied in the previous chapter. First is the HSN, the other is the description, third is the unit, fourth standard rate, fifth preferential rate. Now this heading, this whole chapter, what we are studying is how the HSN looks like, how every chapter will look like. Now, where these notes are useful. See, when you want to classify, you want to determine, let us say I have some live animal only, but where my live animal will fall, you get the hint from the notes. So what the note says, I'm just reading section notes for your understanding. See what the notes give. It says any reference in this section to a particular genus or species of an animal, except where the context otherwise required, includes a reference to the young of that genus also. So they have clarified, because see, normally we have different names used for the younger ones of an animal, right? So a lion's younger one is called something, a cow's younger one is called something. So what they have explained, that when we are giving a reference to the animal, their younger ones, even though given different names in real life, will be covered. See, this is what is the importance, relevance of these notes. They are given to you to understand what will or what will not be covered in that particular section or chapter. Similarly, if you read this chapter, now see, section notes are more generic because I have to speak about all the chapters covered in that section. When you read a chapter note, it is very particular to that chapter. What it says, this chapter covers. So either the chapter notes will say what it covers or it will say what it not covers. And many times when it is saying it will cover or not cover, it is also giving reference to the respective numbers where it will be covered or where it will not be covered. Like here it has said animals of heading 9508. So it has gone up to 95 chapter also. So you have to understand these classification using the notes. Now see, for example, I come to chapter 16. What it says, preparations of meat. As I said, now as you move ahead with chapter, you will find products getting slightly processed. Now, preparation of meat. Again, what the chapter note says, this chapter does not cover meat. Why? Because meat is covered in the initial chapter. So it is clarified. This will not cover meat or meat, offal or fish, etc., etc. Why? Because these are covered in the earlier chapter, chapter 2 or 3 or 6. Not 6, note 6 of chapter 4 has already referred to this. So point is what? These notes are very, very important because they give you clarification as to what will be covered, what will not be covered in the chapter, in the section. Now this, the name of this is called as the title. Now every chapter, as you can see, will have a title, will have notes, and then within the description, again you have some heading. Now these are headings, and under each headings you will have subheadings. Now here comes this important point. You will see single dash, you will see double dash, and at times you will see triple dash. Now, what is the relevance of this dash? Now, for example, here you have single dash 1, again you have single dash 1, again you have single dash 1. But this single dash 1 is now preceded by 3 double dashes, as you can see. Now, what it means? It means that this single dash, what is the name? Of poultry of heading 105. is having subheadings of turkey, of fowl, others. Then next heading is of swine. Within that, again, three subheadings: hams, shoulders, others. So, what does these dashes mean? Dashes mean they are subpart of the main part. Correct? So, when you have two dashes is subpart of the main dash. So, this is the main heading. Of this heading, these are the subparts. So in short, double dashes are subparts of the single dash heading. Similarly, where you have triple dashes, what does triple dashes represent? That again they are subpart of their preceding heading. So where triple dash is preceded by this, it means it is subpart of this. Where triple dash is preceded by this two dash, it is subpart of this. So it is herrings, pickled, others. Then sardines, in that two triple dashes is sardines, sardinella, bristlings, or sprats. So this is how dashes are used. So dashes are used to represent subcategory that you can understand even from the numbers. See, this is having only 4 digits because it is the main heading of the particular chapter. Within that you have 6 numbers, and within that you have 8 numbers. So as the numbers are increasing means what? They are giving the subcategory subheadings of that heading. So it is having only 4 digits. Why? Because it is the heading, and it is having 6 digits because this is the first subheading of this heading, and these are subheadings. That is why you see the number 6 digits is continued, and then you have 10, 20, 90. So wherever all 8 digits are given, those represents the subheading of the main heading. See this. Yes, Geet, you're right. So last 2 digits represents the tariff item. You're correct, Geet. Students, please ask question because this is I am showing you the real tariff. Now, interestingly, this is Indian tariff because this is, now I'll go to the first page because somebody asked, sir, from where we will get. So see, you get it here. Custom policy wing as provides this. But simple, if you want to get this, simply type customs tariff of India. You will get the link from there. You can download. Now with this, let me show you international. So WCO chapter 20. Now this is a book, and it is not available online. It is a physical book, and it is very costly. But since we regularly use this, so I have taken just for your understanding some photos so that you can see how it looks. See, again, even in this, 1 second. See, the chapter headings are same what is there in our Indian customs tariff and even in the WCO tariff. So this is what is an example of WCO tariff. Again, it has notes. These are the notes given for that chapter. So they are the chapter notes. Again, you have subheading notes. These are for respective subheadings. So you have heading also, you have subheading also. So they have given notes for each thing, heading, subheading, everything, right? More notes as you can see. 1 second. Now see, when you will read the WCO, you will find maximum 6 digits only. You will not find 8 digits, what I just showed you. So what I just showed you was our Indian customs tariff. As I had already explained, we are using 8 digits because we have more detailed classification. But internationally, they have only 6 digits. So you will not find any chapter having more than 6 digits. See, so many notes are there because notes are very important because that only helps you understand what is covered or not covered in that chapter. So see again, maximum 6 digits are there. Now, interestingly, you will not find any rate, correct? Why no rates are given? Because this is not a tariff. What I'm showing you is the list given by WCO. So WCO has asked you to use this list. Now you use this list and add your duty rates. So when we are referring to our customs tariff or our excise tariff or our GST tariff, same names are used. Against the names, you have the tariff, that is the rates. But since this is not tariff, this is the WCO's original book where they write their names and you have to use these names. Again, here you will see single dash, double dash. So we are following everything in our tariff, with the only difference that in our tariff, we are also having the rates, and WCO is not having rates, because WCO is not going to give you the rates. That you have to decide yourself. It is giving you how the classification or how the names have to be used. Students, I hope this is clear. And see, these notes are the most important things. We'll see this. These notes are the notes which will be required to understand and interpret any entry. See, I'm opening different chapters. Everywhere you will have not more than 9 digits. Sorry, not more than 6 digits. Because internationally, only 6 digits are used. We use 8 digits. Yes, Geet, that is why I've shown you, because when you actually look at things, you will understand. No, Geet, you are saying on GST invoice maximum 6 digit is required. Why? Because see, when GST law was introduced, initially they made only 2 to 4 digits compulsory. Now they have made 6. After maybe a year, they will make 8. So see, people are not used to using, understand, we are talking about domestic trade when we are talking about GST. A small Kirana shop owner cannot use all the digits. He may not be well versed, right? So that will take time. So slowly and steadily in GST, they are adding. If you go to 2 years back GST law over there, 4 and 2 digits was compulsory. In fact, in the very initial period, they had not given anything about compulsion. It was only recommendatory that you use this HSN. Then slowly, steadily, they started adding and asking you to add the digits. Very soon we'll go up to 8. Correct? So students, I hope you understood the... Now see, I'll just show you the GST rate schedule parallelly. See, now this is our GST rate schedule. Now here we have added the serial number just for our reference. So this is the HSN, this is the description, and this is the rate. Now the difference between customs tariff and GST tariff is GST tariff is having only single rate. Why? Because we do not have standard and preferential, we have only one rate. Whereas customs is having 2 rates, as we saw. 1 second. In the customs, you saw 2 column for rates. Why? Because in customs, this column 4 is for standard rate, column 5 is for preferential rate. Plus, customs also has this column 3, which is for units. Why? Because custom rates may be percentage of value, may be per unit, it can be anything. So they specify whether it is per kg, per piece, per liter. But in case of GST, this column is not required, because in GST, all rates are percentage of value only. So I go back. Now this is the exemption schedule of GST. That is why all rates are nil. 1 second. Now see, these are the rates. When GST, you have this one column. This is for putting any additional condition if you want. So rate, there is nothing written for units. Why? Because all our rates are in percentage, because in GST, we have only one method of charging GST, that is ad valorem, that is percentage of value. Correct? So I've shown you WCO, I've shown you customs tariff, and I've also shown you GST tariff. I hope now it is clear. So I hope you understood what are notes. So you have notes for section, you have notes for chapters. Within that, you have general notes, you have heading notes, subheading notes. Each chapter is divided into heading, subheading. We saw single dash, double dash. They are giving the names which are heading of that and subheading in that, right? Each subheading may be further divided into subheadings, which is having those 3 dashes, correct? Now this is what is explained. So what are the general notes for understanding or interpreting? It is the use of the dash. What is the use of the dash? As we saw, you have single dash, double dash, and triple dash. Now we know what it means. So these are that the headings will have single dash, the subheadings will have 2 dash and the subheadings will have 3 dash. Correct? So that is what is explained. Further, meaning of abbreviation percentage. So as we saw, you have percentage. The abbreviation percentage in any column of the schedule represents to the rate of duty, means that the duty shall be computed at the percentage on the value. So wherever the duty rate is in percentage, it means percentage of value. And then standard rate. If no preferential rate is there, then in the preferential rate column, you will have dash. Fine. So here they have given you example of one chapter, chapter 8. See, something like this is your chapter 8 of Customs Tariff Act. You can see dashes. These are the 5 columns which we have already discussed in the first chapter, previous chapter also. Fine. Now, as we saw, there are multiple notes. So you have general notes, you have heading notes, you have subheading notes. We just saw. So heading notes means where the notes are explaining about the headings, what will be covered in that heading or not. Subheading notes are the notes which talks about the subheading. So see, every name or terminology used has been explained in the form of notes so that it is clear to you what will be covered and what will not be covered in a particular chapter. Now we go to the main part, that is the rules for interpreting the tariff. Just give me 2 minutes. Okay. Now, these rules of interpretation are the main rules or the main guidance as to how you will identify where your goods will fall. Now, what does rule 1 says? Rule 1 says for deciding where your goods will fall, where means in which chapter, in which heading, in which subheading, you should not depend on the titles of the sections or the chapters. I am using the word you should not. Why? Because rule 1 says it is provided only for ease of reference. It does not have the legal force. Means if the heading is saying animals, it does not mean every animal will be classified in that chapter. It is only given for reference that okay, chapter 1 is animals. Maybe your animal may be covered in chapter 20, even though what you are having is an animal, but it may be covered in chapter 20. So please understand this, that headings or the titles or the names given to various chapters or the various headings given in various parts of the chapter are only for reference. Then the question is, then on what basis you will decide or understand where your goods fall? The answer is reading the respective notes. I just showed you the various notes under the section and various note under the chapters. So you have to go to the notes, read the notes given under various section, chapters, headings, and only on the basis of these notes you will determine whether your goods will fall in that chapter, in that heading, in that subheading. So don't go by the names given. This is what it means. Names are to be referred only for reference, but not the deciding factor for classification. Now, so analysis is given, which says the terms of headings read with relative section and chapter notes is the relevant. So rules of interpretation need to be resorted to when classification is possible on the basis of description. So the description given in the notes is what is the deciding factors. Notes of one chapter or section cannot be applied for interpreting entries in other chapters. That is obvious. So examples are given how these notes have to be referred. Now comes to rule 2. Now rule 2 is divided into two parts, A and B. What does A deals with? A deals with those goods which are in incomplete or unfinished form. What is incomplete or unfinished? Understand this. Incomplete or unfinished is many times because of the transportation problem or handling problem. When a manufacturer is sending his goods to the dealer or to the um other counterpart, he may not send it in the final finished form. Either he may keep it incomplete or he may send it in unfinished manner. Why? Because for ease of transportation, if I fit the goods and make it ready, it may be difficult to transport. It may consume more space and hence more cost will be incurred, or it may be difficult to load and unload. Like heavy machineries. If I complete the whole machinery, if I fit it, the machine may have some odd shape which will consume more space in that truck, whereby less number of items can be loaded in the truck, which will lead to increase in the cost. So to save on the cost, I will try to keep the machine in unassembled form, unfinished form, so that it can be easily transported. Giving you best example of cycles, motorcycles. When cycles, motorcycle, these things are dispatched by the manufacturer, they are not dispatched in the complete finished form. They are kept unfinished, they are kept unassembled. In case of cycles, different parts are sent. Now, what this rule is trying to tell you, that when different parts are sent, you have to keep this in mind, that even though what is being sent, what is physically being transported appears to be parts, but what is the intention? The intention is that the manufacturer is sending the final product only The only thing is that he has kept it unfinished, incomplete for ease of transportation. So rule 2A says that when any article is sent by the manufacturer in unfinished, incomplete form, disassembled form, you will treat it as the main product and classified in the chapter of main product only. So, goods sent in unfinished, incomplete form, classified in the chapter of finished product only if these incomplete or unfinished goods have the same characteristics as the finished or completed goods. So, Rule 2A says unfinished goods, incomplete goods, unassembled goods are also classified in the chapter or heading of the product which is finished. Only condition is your goods which are unfinished, incomplete should have the same characteristics as the finished goods. Similarly, what is said, only goods requiring minor adjustments can be considered as having the essential character. Now comes rule 2B. Now, what is rule 2B dealing with? Now, many chapters which you will see is not using the names of the final product. Like, as I was giving example, chocolate. Chocolate is the final product. You will not find anywhere the word chocolate, but you will find the chapter saying products of cocoa. So, cocoa is the material using which chocolates are made. Or they will say products of paper industry. They will not give you the final product name. So many times it is the names of the materials or components which are used in the chapters. It means many chapters in this tariff is not covering the names of final product, but it is referring to the materials components which are used in making that chapter, making that product. So what does rule 2B says? That whenever you are classifying any product, the product will be classified by giving reference to the heading which is covering the material or substance. So, when let us say you are making a product, let us say it is a file. Now, there is no name in the entire 98 chapters called as file. So, where you will classify the file? So, applying rule 2B, I will classify the file in that chapter which is giving reference to the material or substance which is used in making the file. Now my file is made using paper. So I will go to that chapter which says products of paper. If my file is made using plastic, so I will go to that chapter which gives reference to plastic, like products made of plastic. So what I'm trying to say is that this rule is applicable whenever your products are made using a particular material substance. You have to refer or you have to find out the name in this entire tariff of the substance or the material with which your product is made. So rule 2B says classify your products taking the reference of the material or substance using which your product is made, because in many chapters the heading used is not of the final product but of the material or substance with which that product is made. Now, any reference to goods of given material or substance shall be taken to include a reference to goods consisting wholly or partly of such material or substance. Coming back to the example of file, if you see a file which is used in offices, a file is mainly made of paper, assuming I'm talking about the hardboard files and not the plastic files, but it also has small parts like the spring or the main item in which we file the papers, which is made of some steel. Now, the point is, every product will have some minor other materials used. But when you are applying rule 2B, you have to classify the product in that chapter, which is giving reference to that substance or material with which your product is wholly or partly, means where, which is the major material in your product. So, like in case of file, even though some parts of steel or metal is used, still file will be classified on the basis of that material, which is the main part of that file. Now, interestingly, what will happen if your final product consists of more than one material? Here, I always give a very simple example of mango lassi. Now, my product is mango lassi. There is no product called as lassi or mango lassi in the tariff. But you have two chapters. One is of vegetables and fruits, where mango and mango pulp is covered, and another is products made of milk. In that, you can classify lassi. Now, when I am applying 2B, which says that you classify your product taking the reference of the material which is used in making the product, here I find a small problem because my product mango lassi is used making two components. One is mango pulp and one is the lassi, which is a product of milk. Now, when I get stuck up in rule 2B, because my product consists of two or more substances or components, then I will classify it under which chapter, whether of mango pulp or whether of product of milk. For this, you have to now come to rule 3. This is what is given in rule 2B itself. Now, rule 3 will guide you. So, whereby applying rule 2B, or for any reasons, goods are prima facie classifiable under two or more chapters or headings, then how classification has to be done? So first it says apply rule 3A. What does rule 3A says? Specific over general. So if you are finding your product made of 2-3 items, and because of rule 2B it gets classifiable in both or two or more chapters, then out of those chapters, under which chapter you will cover your product? The answer is, here I will apply this rule. First rule is general versus specific. Obviously, that chapter which is having a more specific reference will be used over the chapter which is a more general reference. So, if my product, let us say, is a playing card. Now you have a chapter of toys also, you have a chapter of printed or printing industry material also, and you have a chapter of paper products also. Now when I'm saying card, playing cards, it will be classified using rule 3A in the chapter of toys. Why? Because the more specific reference of this item is a toy, a playing card, even though the cards are made of paper, even though the cards are coming from printing industry, because on that you print different things with which are used for playing. But the main specific nature of your product is that it is a toy, because it is used for playing game and entertainment. Hence, applying rule 3A, out of these three chapters, I will classify the playing cards in the chapter which is referring to toys. Second, if rule 3A does not help, like in case of my mango lassi, rule 3A is not helping. That is why I changed the example to playing cards. Now for mango lassi, what is helpful to me is rule 3B. What does 3B says? If your product is classifiable under different chapter, like my product mango lassi gets classified under two chapters, products of milk, and also the chapter which covers mango and mango pulp. Now out of this, I will classify mango lassi under which chapter? I will get answer from 3B. 3B says classify it under that chapter which is giving your product the main character. So what is the main character of my product mango lassi? Is it a mango, the main character, or is lassi the main character? Answer is obviously lassi. Mango is more for flavoring. So even though I have put raw mango pulp in my lassi, and we call it as mango lassi, but the pulp which is used is more for a flavoring part. The main character, the main essential nature of my product is lassi. So I will classify it in chapter which is products of milk and milk industry. So I will classify it in the milk product chapter, rather than in the mango or mango pulp chapter. So this is how rule 3b is used. And then come rule 3c. If at times you find certain products which are classifiable under different chapters and you do not get answer by 3a and 3b both, 3a says go by the specific name and 3b says go by the essential character, both are not helping, then 3b says no problem. Out of all the chapters which you feel that your product can be classified into, take the chapter which comes last in the sequence. So you have chapter 1 to 98. So if your product can be classified in chapter 21 also, in chapter 35 also, and in chapter 44 also, and you cannot find the correct classification by 3A, 3B, then using 3C, you will finally find the answer by classifying the product in chapter 44. This is how rule 3C is applied. Then comes rule 4. Now, generally, rule 4 is used for new products. New product means many times as technology progresses, as new inventions are done, or when new need is created, some new product comes into existence. Now, in the initial period of a product, you will not find any reference of that product in any chapter, any heading. Why? Because these HSNs are revised over a period of time, but till the last revision, this product was not in the market, so nobody was knowing this product. Now, if this product has come into existence, then, like I'll give you example, we play with those cubes, right? And now the cubes are in different shape. We have to match the cubes. We have to bring all colors on one side. Now, that I saw only since last 5 7 years. Before that, I never saw anything like that. So, in everything, you are finding new things coming up. Now, when a new product comes into existence and it cannot be classified above, Rule 4 helps. What does Rule 4 says? You may not find the name of a new product or the reference of new product in any chapter. Maybe after revision, that product may be specifically covered in some chapter or in some chapter notes. It will be given reference that how this product has to be classified. But until then, you use Rule 4. Rule 4 says classify your product in that chapter where the goods given are similar to your product. So, what your product is usable for, what is the functionality of your product. See that chapter where the goods are having same functionality, same characteristics, same usage, and classify your product in that chapter. So this is what is the akin. Akin means similar. So classify your product in that chapter where the goods are having the similar traits, similar features, similar functionality as your goods. Then come rule 5. Now, rule 5 is a very specific rule. So, rule 1, 2, 3, 4, I call them as general rules because they are useful for all products. Rule 5 is only used for packing items. So, like how you have your product, you have also a packing in which your product is packed and it is sold. Now, when you are packing your product in some box or in some packing item, this box or this packing item is also made by some industry. Now, that industry has to classify that packing item. How will this packing item be classified? So, for this, you have rule 5. What does rule 5 says? 5a says if the packing item is such that it is specifically, uniquely designed only to keep a particular item, only one item. Like examples are camera case, musical instrument case, like the guitar case and all, like your pistols, guns, gun case, drawing instrument case, necklace case. So there are so many examples where the box is so designed that it can be used only for keeping that one item. In such case, Rule 5a says classify that packing goods in the same chapter in which the main goods are classified. So pistol case may be made of plastic, may be made of rubber, may be made of leather. Will not go in these chapters, that is product of rubber, plastic, etc. It will go in the chapter where pistol is classified. Guitar is a musical instrument which is classified in the last chapters. A guitar case may be made of wood, may be made of some leather, but it will not be classified in the chapters of products of leather, products of wood. It will be classified in the chapter of guitar. So where a container, what conditions are to be fulfilled before you apply this rule? These cases or containers are specifically shaped or fitted only to hold or contain those specific articles. So even if you see the shape, the gun holder, your guitar case, the shape is also such that only a particular thing can fit, like only a guitar can fit, no other thing can be fitted. So such things are to be classified in the respective goods only, not in the chapters where the packing material can be classified otherwise. The cases containers are suitable for long-term use and presented with the article for which they are intended. So first condition is that the shape is so designed only to fit that article. Second, these cases are always given with the goods also. So it is that when you go to buy guitar, you will always get the guitar case. And in fact, you'll get guitar case from that place only, not from any other place. So these are the two conditions to be satisfied. If both these conditions are satisfied, the packing goods will not be classified in the respective packing chapters. It will be classified in the chapter of the main product, which this packing goods is going to hold. Next, second rule in this is subject to the above rule. Other packing materials presented with the goods therein shall be classified with the goods if they are of a kind normally used for packing such goods. However, this provision does not apply when such packing materials are clearly suitable for repetitive use. Now, the second rule says there could be certain packing material which are of repetitive use. Like I'll give you an example, a gas cylinder. So in a gas cylinder, when a gas is supplied, let us say we talk about LPG or oxygen cylinders. When these gases are supplied, after the gases are consumed, the cylinders come back for refilling. Again, they are sent back. So when a particular packing material is capable of repetitive use, it will go to the chapter of that packing material. If not, it will again go to the chapter of the respective goods. Now, in case of gas cylinders, since cylinders are reusable, they will go to the chapter where cylinders are classified, not the gas. But where if there is any packing material, like today you buy a Pepsi and Pepsi comes in a bottle, the bottle is of repetitive use, it will be classified in bottle chapter. But if you make a particular, like those boat juices, where the packing is made in such a manner that it is not reusable and it is always the goods are sold in that packing only, then it will be classified in the chapter where the juice is classified. So this is how rule 5 works. Rule 6 says all the above rules that you are applying, you apply it first at the chapter level, then the heading level, then the subheading level. Means you go step by step. First, applying the rules, you find your goods will fall under which chapter. Once you have identified the chapter, now again apply the same rules to identify which heading of that chapter. Once you have identified the heading, that may have multiple subheadings, then out of multiple subheadings, which subheading it will cover. So you apply the same rule at all levels to first decide chapter, then to decide heading, then to decide subheading. Project imports. Now, what does project import covers? As we saw, you have a separate chapter, that is chapter 98, which specifically covers project imports. Now, firstly, what are project imports? Now, when, let us say, I want to set up a nuclear facility in India. Now, setting up a nuclear facility requires different types of uh, machines, components, so that I can design that entire place to work as a nuclear facility. Now, for setting up this nuclear facility, I will require multiple items, and maybe these items may be coming at different points of time and maybe at times from even different countries. But all these are for one single project, that is making a nuclear facility. Similarly, let us say I want to create a launch pad for launching satellites. Now, again, for creating that launch pad, I will require different parts coming from different countries. But all the parts will be ultimately used for one thing, that is creating that satellite launch pad. Now, when you are importing multiple items, maybe from multiple countries, but the ultimate purpose is one single project, you call it as project imports. And as we saw, chapter 98 has a special reference to project import, whereby all these imports of all different parts will be taxed at the same rate. So this eases out your pressure. So classification problem is gone, or even the problem of having different rates and finding out what will be the actual cost of my final this entire facility is simplified, because one rate will apply to all the products. Now these products may be actually covered in different chapters, because different machines are covered in different chapters, different parts are covered in different chapters. But when they are imported for one common purpose, like nuclear facility or satellite launch pad, they all will be classified in chapter 98, having a single rate given to them. So your business decisions become easy. That is what is the purpose of project imports. I think that is the end. Yes. So students, these are the different rules given that helps you in deciding how to classify your goods and how to determine what rate, what HSN code will apply. I hope you all have understood this. If anybody has a question, please feel free to ask. Request you all to please read this chapter in detail with all the examples. Very beautiful examples are given for every rule, every point that we discussed. When you read these examples, you will be able to understand and apply all these rules in a much better manner, because all these examples which are given here have a very good references to respective rules and how these rules are applied. You will find some case laws, because on that related rule, if there was some dispute, how the courts have interpreted the rule, everything is given. And specifically this last part, which is project imports. This is also a very important part. So what is important in project import is that even though multiple items are being imported, and these items are actually covered in different chapters because they are of different nature, but when as an importer you make a declaration at the start to the customs saying that, see, over the next 2 years I will be importing all these items, you give them the list, what items and which place, and mainly you tell them, see, I am setting up this facility in India. For this one facility, I'll be importing all these items. So instead of classifying all them in respective chapters, they will classify it in chapter 98, which is the chapter dealing with project imports. So this helps you in proper classification. So students, I request that please read each and everything given in this chapter. It is one of my favorite chapters in the entire taxation, not only customs or GST, entire taxation subject. Classification is a very interesting chapter. In fact, let me inform you, some professionals, chartered accountants, are specializing only in classification. So their practice is only classification, and industries, importers, many times even government agencies, they hire them for giving them the final answer as to what correct classification applies to them, what HSN code will apply to them, which these businesses or the government agencies can use for their purposes. So some professionals are exclusively working, specializing in this topic of classification. That is their entire practice. So with this, students, I conclude my today's session. Kindly read In case you find difficulty in understanding, in comprehending any part, we will connect next class. So at that time, you can raise your queries, right? So that is all. Thank you, students. Have a great day ahead. Anybody having any questions, please put it across. Yes, thank you. Thank you very much. Okay, then. So we conclude today's class. Good day. Thank you. Good day, Ashok ji. Yes, sir. Session over, sir. Okay. Same day. Same, Ashok ji. Bye bye.